Greetings and welcome to the afternoon session of, I hope everyone hasn't eaten too much, so I'll try to keep you amused and not allow you all to nod off. When Ian kindly asked me whether I'd be interested in doing this, I thought for someone, I've been here 3 months, apologies to the non-PNG people, but I really don't know a lot about the industry outside of PNG. But I think the basic principles are still there. The topic that we were addressing today is investment to build for the communities within the region. And I think the way I looked at it was to look at what's happening in the rest of the world now at the cutting edge, to let you know this is where things are heading for, and then to address whether or not they're achievable within the region in the near future. There's a couple of other things that I've put in as well, but I'm coming at it from that. There is a question time at the end if anyone wants to talk about events of the last few weeks and things. I'm a fund manager, so anyone's a fund manager will always like to talk about them, but I don't intend to in the address actually speak to those. Yeah. Effectively, that's just what I've outlined there, the agenda, asset allocation, as I said, the latest global trends, and they will be quite different from, I'm sure, most of what anyone's seen here so far, maybe with 1 or 2 exceptions. Relevance in the region, and I'm going to spend a bit of time talking about multi-managers because I think this is a key part of how we can deliver this into the region. And finally, one of my favourite things is each month I try to come up with a silly idea that might lead to something, and I thought, well, for this conference I'll come up with a thought to throw to you, maybe for discussion on Wednesday. Very quickly give you a brief outline of who Pac Wealth is. We are literally a new startup funds management company that I've been CEO for 3 months. The company I think has been in existence for 4. We are established here. Our partners are in some cases quite well known. Obviously Westpac's one of Australia's leading 4 banks, and through its BT arm is one of the major fund managers in Australia. DFK Richard Hill's a leading accounting company here that's been in existence for about 35 years. The local partner in it, Michael Maybury, has a very, very deep history in PNG. He's been a governor on a board member at the central bank and such things. He's very well connected. Tonair is a private company, a global fund management company. One of the family members there actually runs one of the hedge funds that our group's involved with. And the last person, for anyone that knows and likes rugby, is probably more well known than anyone, John Eales, who's an exceptionally well rated ex-Wallaby captain and also running sort of a private business consulting in this region. They between them give us, I think, something which is we needed for me to even try to think I could do this job, which is access to the best fund managers in the world, but also tremendous knowledge of the region and particularly in PNG. So it gave us a great starting base. Through the business, we're looking to offer traditional asset classes, alternative investments, and one that's not often talked about, currency management, which we think is quite critical for this part of the world. As it said, over 40 years, I guess I feel I can indulge myself a little bit and talk about what I've seen through that time. When I joined the industry in 1969, for any historians of particularly the Australian stock market, that was the start of the Poseidon boom, which is still probably one of the more interesting resources booms ever seen. Poseidon, for those that don't know, went from 30 cents to $350 in the space of about 6 months. It was an interesting time to join. The industry at that stage, I would characterise as not too far removed from where PNG is today. It really didn't exist as an industry. The superannuation industry was mainly defined benefit. It really was a bit of a backwash to everything. The changes that have gone on in that period, particularly from the funds management respect, as the introduction said, we were generalists. You did everything. You know, I was managing portfolios, doing the marketing, doing the client servicing. You were involved in everything. Today, it's become so specialised that I think even a lot of the fund management groups these days are struggling to come to grips with the various skills that are required. I think one of the big things that's come out of it, and I notice the Governor has left, is that I think regulators are having some significant problems trying to keep up with the changes that the industry is coming. It has been developing, and a major part of what took place over the last 2 or 3 years with the GFC came from basically the inability of regulators and senior levels at banks to actually understand what was being done with the money. One area that I personally am very passionate about, the major area that I think the industry has let itself down, not just in Australia but globally, and I guess at the level where we're at with development here, something can be done, and that's the education and communication to the investing public. I believe it's been an absolute disgrace the way the industry has failed to deliver that to the communities. People don't understand, and even listening to the TV in the last few days, you hear people saying how their whole planning for their future has been destroyed because of a 15% fall in the market. You know, that isn't correct, but people don't understand what is actually going on. And I think if there's one thing I'd say to put high on your agendas is to actually plan on really telling people teaching them what investment is about, and just as importantly, giving them information about what's happening with their money. You can go into any website of any major superannuation fund in the world, and you'll be lucky if you know what they're doing with the money. You'll know 6 months on, but if you can actually find out what they're doing with the money that week or the next month, you'll be very, very lucky. And I think that's wrong. It is the money that we as fund managers manage, and for most who are from the superannuation side here administer. You're there to look after people's money. It's not our money, it's the money of the members. And I think that's one of the things that a lot of fund managers particularly don't understand. As I said, on to the local latest trends in global. If we can flick on to the next one. I think what I'm trying to sort of get through today, this is probably the most important section. What you have in front is on the left, as we look at it, the current position. Now what I've done here is actually taken number one and NASFUND's portfolios as at the end of December out of their annual reports and just merged them. So that gives you the current asset allocation between the major normal areas. The centre column, called current allocation, is where the world basically sits today as a general comment. So that's what a lot of funds, particularly say in the West, are looking at. So you're talking 10% cash, 20 fixed income, 50 in equity and property, and 20 in alternatives. What then goes to latest thinking, and this is the cutting edge of what's going on, you've got 10 in cash, 35% in what's called market sensitive. That is securities that move with the markets, basically bonds and equities, listed equities. 10% in real assets, which predominantly means property or something similar, gold. And then you get this thing called market insensitive, which is, they're putting at 45%. Market insensitive are investments into certain forms of hedge funds where the movement, the return on the fund bears no correlation at all to the underlying markets that it may be involved in. So you're not just talking of the whole range of hedge funds, you're talking of quite specific funds. And if we can flick over to the next page, the reasons why we're seeing this is the trends we've had over the last, 15 years now of constant volatility in markets is basically the building blocks that the industry has built itself on over the last 50, 60 years. Your base portfolio is full of bonds and equities which give you a nice stable long-term result. That's no longer working. So consultants are looking at it saying, what can we do with it? And there's a little illustration there, you'll see